Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today we are bringing to you a new corporate conversation. A company which is now bringing out its IPO and is very soon going to become a new financial services listed company on the bourses. And the company also enjoys the strong pedigree of Federal Bank. We're talking about a subsidiary of Federal Bank, and this is Fedbank Financial Services Limited. Joining us on the show today to speak about the company and the IPO is Mr. Anil Koturi, the MD and CEO of the company. Anilji, welcome to the show.
Hello, and thanks for having me here.
So let's first start with the most prominent part, which is also a competitive advantage for you, which is being a subsidiary of a bank, and help us understand the journey of the company, why this was formed as a separate subsidiary, what has been the focus. It's an NBFC. It is active in home loans, gold loans. Help us understand what's the business model.
Sure. So, I represent Fedbank Financial Services Limited, or we'll call it FedFina for short. Okay. Our mission is to empower emerging India with easy access to loans. What this means is that we serve the small self-employed customer, that's emerging India. Okay. And we will use whatever information he can provide and whatever collateral he can provide and fashion a loan on that basis. We will do it quickly. That is easy access to loans. Okay. Now, the MSME segment in the country is hugely underserved. Less than a fifth of the demand of this segment is catered to by formal financial institutions, and the remaining just goes a begging. Okay. So, we come to work to empower emerging India with easy access to loans. Okay. So that is the reason this entity was founded, and that is the mission of this company. Now, you're right. We are a subsidiary of Federal Bank, and that confers certain advantages upon us. Okay. The first is that we have access to a low cost of borrowing. Last year, our cost of borrowing was about 7.8%. We were rated AA minus last year. We have since received a rating upgrade. But this cost of borrowing compares quite favorably with companies who are even rated AA plus. Okay, so that's the advantage that we have being a sub Federal Bank. Now, in terms of business model, what we seek to do is to provide working capital loans to small self-employed customers. And we do this in three ways. We either do it against gold, against property, or we do it without security. Okay, so these are the three primary products that we have, which comprise our portfolio. Now, over the past few years, we've invested quite heavily in building distribution, adding people to our branches, and in technology. Our branches have been increasing year after year, and as of March, we were at about 575 branches across 16 states and union territories. We've added some more since then. So that's the spread of our distribution. Okay. So we have a business model that is resilient. We do working capital loans, and the fact that we do lending against gold complements our working capital loans quite well. In good times, everybody wants to borrow against property and unsecured, whereas in bad times, they see gold loans as the only form of lending or borrowing that is viable. We saw this during the 2 years of COVID, where we held the working capital book constant, but the gold loan business actually doubled. Okay, so there's resilience embedded into our business model. So, in a nutshell, that's what FedFina is about in terms of mission, product portfolio, and advantages that we have.
Let me touch upon the geographic concentration here, geographic, I would say, presence here. Gold loan, something basically is now forming around 32% of your total loans. Perhaps 2 years before it was higher because, as you just highlighted, during COVID it doubled. So, because of strong growth, it was forming higher percentage. But now it's forming 32%. And while I was taking a look at the list of geographic presence, I was seeing that in Kerala, Tamil Nadu, they're not actually forming a prominent presence. In Andhra also, basically, it's different, but Tamil Nadu, Kerala is definitely there. And these are the areas which are very strong in gold. So I was curious to ask you this, why in southern part of India, or perhaps it is part of futuristic plan, what's the sort of plan around there?
So we are present in now 16 states across the country. We have gold loan branches everywhere. Now there is a standard AUM per branch that we target across the country. It was 6.5 in the beginning of the year, and it is increasing during the course of the year. So we've been opening branches consistently over the past 5 years. So the AUM per branch is a function of the vintage of the branch. It matures at about 3.5 years, where the AUM growth kind of tapers off. That's basically the way it is. The next thing is that there are different parts of the country which have a different density of gold loan branches. And here I'm talking industry concentration of gold loan branches.
Sure.
Uh, South India is better served in that regard. Non-South India branches tend to be less dense, so therefore the AUM per branch tends to be higher. That's just the dynamic of the industry.
Sure. So, your own strategic sort of preference from the perspective of branches amongst 500 plus branches which you have right now, what's the spread between mature branches and the branches which have opened recently?
So we've been opening branches every year. Okay. In the last financial year, we opened about 50 branches. Okay. And the previous year, we opened another 70 or so branches. So every year we keep opening branches. So there is a set of branches which are year one, year two, year three, and beyond year three, we classify them as mature branches. But the important thing is the proportion of your year one, year two branches, okay, keeps coming down year after year. In the first year, it used to be 50%. The next year, it was 33%. The next year, it was 20%. Now, in this year, it is something like 10% when you look at your nascent branches overall.
But sir, I'm asking from the perspective of, because what happens if you have 120 or more branches, which implies around 20% of the spread. If that basically is young branches, it automatically implies when you go to next year, all the viewers, investors, they will know that this is an upcoming trigger where these branches will start showing more AUM, thereby profitability starts going up. So I was
Correct.
asking from that perspective. Which implies around, and again, you will be opening similar set of branches this year also, and then next year also, right?
No, our branch opening, the new branches as a percentage of total will keep coming down. Like I
Okay.
said, the first year it was high, and as a percentage of total, it will keep coming down. So, which is
Okay.
why you look at a mature, large organization, new branches will be a negligible portion of their thing. Then. So, we have some way
Right.
to get there, but yeah, the salience of new branches keeps coming down.
Understood, sir. Now, one thing I wanted to ask you, net interest margins, NIMs, that basically has increased from 8% to almost 9% now over the last 2 years. What's your own sort of imagination about a mature NIM? And like, is this 9% NIM sustainable, or it was a function of different segments? Like, where do you see or where you'll be happy if on the NIMs?
So you're right. Our NIMs have grown over the past 2 years. That's even without raising new equity. So which means that our spreads have actually increased far beyond that. Okay, but I think from a sustainability standpoint, somewhere between 8 and 9% is where we should net out in terms of average NIMs on a sustainable basis. Yeah, some quarters we will do a little better, some quarters we will do a little worse. But yeah.
Yeah, because we are almost at the peak of the interest rate cycle, and usually when the cycle changes, you slightly moderate out to a mid-range long-term NIMs. So perhaps, yeah, this is what
No,
actually
actually,
you'll
when the cycle turns, NBFCs make more money. On an
Okay, so then
upswing,
then
on
then I
average,
should
they
ask
make.
you then I should ask you from this angle, like opposite to the banking side. I should ask you. It makes sense, yeah, what you're saying. If the cost of borrowing basically has been around 7.7%, and suppose that the interest rate cycle turns down, uh, uh, what's the usual average sort of tenure of funds raised by you?
That funds that we raise, the average is about 2.5 years. And here
Two
I
and a half.
must point out another dynamic at work. What happens is that the maturity, our average maturity of our loans is far less than the maturity of our fundraise. Okay, which
Okay.
means that we actually borrow long and lend short. The gold loan book turns around in 4 months. Okay, but the average maturity of our borrowing is 2.5 years. So every bucket of our ALM is positive on a cumulative basis. Okay, that's so, which also means that when the short-term rates moderate, there is opportunity to borrow more short-term. Okay, so that's a flexibility that we have, which we can use at an appropriate time.
Right. And also, I was looking that most of your funds raised, which is normally classified as liabilities for NBFCs, so most of the funds raised actually are floating rate, roughly around 85 to 6%.
Correct.
On that account, even though it's a short tenor a loan which you're giving, how basically this is on the sort of loan side? Are they also floating rates or they're fixed rates? How do you match it?
Uh, so it depends on product. Different products have different dynamics, but the important thing is that about 30% of our book is gold loans. Okay, and
Right.
that matures in 4 months. So in effect, it is repriceable every 4 months. That's the way to look at
Right.
it. That's
And
30% of the assets that
from
we
that
have.
perspective, the interest rate risk is very low because the tenor is
That's
very small.
Yes. So that's the advantage that our mix of products gives us to manage ALM as well as interest rate risk.
Right. And as we move towards next year, next calendar year, I should say, over the next 12, 24 months, how's the company sort of looking forward to from the perspective of spread, business dynamics? How are you seeing the gold loan market, the housing loan market? Like, how are you seeing them?
So our plans are quite clear and consistent. We've opened a lot of branches over the years, so we seek to build AUM in each branch. Okay,
Mm-hmm.
and as we do that, what will happen is that operating leverage will kick in. Our costs will not grow in the same proportion as the interest income, so therefore we should be a little more profitable. Every succeeding quarter we should be a little more profitable. On a same set of branches basis. So that is the endeavor. Also, it's widely expected that the next 2 years the environment will be buoyant, so therefore credit quality will be benign. So we hope that it actually plays out that way, and kind of benefits us. We are also in the market for 600 crore rupees. Once we raise that money, it will further shore up our capital position and give us ammunition for further AUM growth over the next couple of years. Yeah. So that
Also,
really
so
is the future.
sure. What's the leverage ratio, sir, which you're working right now before the IPO?
As of March, we were at about 5.35 or so.
Oh, then basically these funds actually are definitely going to help you from the perspective of lending plan because it's going to boost up
Correct.
that sort of space here. Uh, Now, help us understand how much funds you're raising and will that entire amount actually be allocated as a raw material for lending in the case of NBFC?
So the IPO will be 1,092 crore rupees, of which 600 crores is primary, which means that 600 crores will augment the capital position of the company. The remaining 492 crore rupees will go to the selling shareholders. They are selling shares worth about 492 crore rupees. So that is what it is. So 600 crore rupees will take up our current equity base from 1450 crore rupee plus to about 2100 crores or so.
And I was looking at the AUM again, almost 10,000 crore AUM. Correct me if I'm wrong, but if I do a multiplier effect here, 600, and that is 3,000 crores lending, perhaps that could happen. Uh, does that imply that you actually will be well past any requirement for the next 12 months at least?
Our estimate is that for the foreseeable future, this capital go because we lend, there is profit that will accrue,
Of
which we can use to
course.
further lend, and therefore there's further profit and so on. For the next 3 years, I think we should be reasonably good. Yeah, that's what it's
Oh,
looking like.
that's great news, I think, for the investors. So, which implies you're basically on your way to sort of monetize the branches. But just revisiting one number, so that I remember that you had highlighted, sir, AUM per branch. What's the metric you had highlighted? What are your expectations on AUM per branch? What that number should be?
So we have gold loan branches and small mortgage branches, and we track AUM per branch for both these. Our AUM per branch for gold loans in the beginning of the year was 6.5 crore rupees.
6.5 crores. Okay.
Yeah, we are seeking to improve that quite significantly in the course of the year.
Sure.
So this year we've not opened any gold loan branches, but instead we are focusing on realizing efficiencies of the branches already opened. So
Okay, sir. Noted all of that. I think perhaps the NIMs are looking rock solid. You have an advantage of low cost borrowing, which perhaps is going to help a lot from any perspective of lending, competition, expansion. Um, the fundraising in this IPO is sufficient for at least 3 years. That again is good news for the investors, and perhaps it's a huge market, and that actually paves a long way of growth for you. So all of those, perhaps our viewers actually will find interesting to really look at the IPO and understand more about the company. But we would like to thank you for coming on our show and giving us all the insights. And from all our viewers, from all our side, we'd like to extend all the wishes to you for a very successful IPO.
thank you so much for having me here. Yeah, thank you.
And dear viewers, hope you enjoyed this conversation. For now, it's a wrap.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.